Hello everyone, this is the Intuitive Trader. I have no idea how long this video is going to be. Something happened recently with me in trading and my risk tolerance and my risk management, and it really opened my perspective up to why being a retail trader is so hard, even after so many years. But anyway, this is going to be sort of a rambly video. There's no script, it's just me talking. And I'll get to the point here. A couple days ago, well, I guess I should say that for the past couple months, I have been on a insane roll. I've been doubling my accounts. I've been doing zero DTE expiration trades, directional trades, with very little risk management. I just wait for places that I feel comfortable, and then I go for it. And when I go for it, I mean I really go for it. And if I lose and I'm wrong about it, I'll cut the loss, and I'll even do it at market. So it's not going to be like I'm worrying too much about when that gets filled. But recently, I had a series of mistakes that really cost me quite a bit of money. One being that I had positions in oil that I had left open while I was about to fall asleep, and I had a limit sell, and it was really close to the limit sell. So I had just assumed all these orders are gonna fill, and I just didn't think about the amount of money there that was unprotected. At any point, it could have gone the opposite way, and it did go the opposite way. And what happened when it went the opposite way is that I ended up losing an insane amount of money, and that's what happens when you're trading future options. Similar to where you can't go below zero, but most likely if you're holding quite a few contracts, you can take easily a 50 to 60% hit on a position that was close to in the money. That was a huge error and something that I'm really embarrassed about. It's just not something that's happened too much. Then we go on to just the lack of risk management that I've been practicing, and it's worked for me, and it's worked for me because I'm a very risky, aggressive individual. I have very little emotion when it comes to money. At this point, I could lose $50,000 to $100,000 and not feel bad, right? But because I know that the way I trade, I'm gonna have those losses, and I'm gonna have days where I'll make triple that, right? And so I kind of can move past that in my brain. But, recently with all this volatility, you can get really cocky. You can get really cocky because the market moves in one way, it's in a trend, and you're right about that trend, and you just go with that trend and it's working, and you think, "Oh, well, I'm doing very well." And we all know that that isn't how this works, right? You have to be able you have to be able to trade on the uptrend and the downtrend. And you always have to be vigilant for that rogue wave that will come and the trend reversal that you need to be watching. And if you're not really attentive, then you will potentially lose quite a bit of money. If you don't have stop losses in place, then there's nothing really stopping you from losing a lot of money. So this is where my greed has come into play. I have lost close to $350,000 in just a couple of days, which could be one of the biggest losses that I've had in a series of trades. I've just never really experienced that many losses. Just to give an idea of what kind of trader I am, like the name of this channel is the Intuitive Trader. I have what I would call pretty good intuition when I'm trading. I'm able to notice trends in the charts. I have a pretty good foresight of what might be coming with certain events, and I think I've had a really great success rate. There's always those forex challenges, there's always those future challenges, who can perform the best, and I've been up on the leaderboards quite a few times. But there are situations where I think it's just a matter of you trade for so long that you no longer keep in step with where you were in the beginning. And I think this is where people start. So Drunken Miller is a really great idol of mine. He says the same thing. I've been performing well for the past decade and a half or something. But in recent years, things have changed. And It's really hard to adapt with the market. And we're, if you were a trader in 2016, 2017 was a wild year, and 2020 is a beast within itself. It's one of those years that the volatility in the market and tweets having such an effect, you don't even really have to wait for reports to come out for anything. I mean, if you're trading grains, that is very important. If you're trading oil, less so important now. It used to be the most important thing to be looking at is the reports. Is it a draw? Is there more supply than expected? But now it's just a tweet from Trump or a geopolitical event that happens, and you have to be there for that. I mean, within 5 seconds, I think 5 seconds might be 2 seconds too late. You have to be able to just move on that. And I was able to do that for a while. I mean, you get Bloomberg Terminal and you just keep an eye out on everywhere. And yeah, it's just rough. This is sort of a good video to watch as a beginner, because you will have those days where you win and you win and you win and you think, oh, well, I'm on the top of the world. I can keep on going. But at some point, you should be taking profit. And to be fair, I have taken profit. I run multiple companies. So any profit I've taken has been reinvested somewhere. It's really hard to not be... it's really hard because I don't maintain a lot of liquidity. I don't have a lot of cash on me. I typically reinvest things pretty quickly. But losing that much money in a day, oh my God, it's just a different feeling, especially knowing that thousands of trades have happened to get to that point. And I'm not kidding when I say thousands. I'm a very frequent trader. I will get out of a position before it's even moved a tick if I'm not comfortable, and I'll average into certain positions really heavily. I'll just go into it like crazy if I'm confident. But I just messed up there. It was a big mistake. And, I would say that we all will have those days. And it's important to remember, so I got a job offer recently at a prop firm. And, the number one thing they're looking for now is actually people with math backgrounds and psychology. And honestly, electrical engineering is also something that they've been looking at. They're not really looking for people who are good traders. The reason they're not looking for good traders is, like I said, a lot of people use their intuition. And unfortunately, no matter how good you are when it comes to being a good intuitive trader, you will never be able to beat the EAs and the algos and the high-speed traders and their computers. You have to remember that their computers will redo quotes for them seconds. I mean, they're on top of everything. They'll look at all the thetas for them and make sure everything's right. And you just can't compare. Your brain is always going to be too slow. So then you come to the conclusion that you are in a losing battle. You are going against people and firms that are ahead of you. They're 10 steps ahead of you, actually, and you're trailing behind. That's why it's important to be taking profit. It's important to be taking profit because at some point you have to realize, no matter how good you think you are with your technical analysis or your charting, you're really not that good. I promise you're not that good if you're not utilizing some sort of robot or AI in your trading. I'm a traditionalist. I just love trading. I don't want automated trading. It's not fun. I mean, it's fun to trade. It's fun to be in front of the computer, be looking at the news and trade. And I know a lot of traders now that are professional traders, their job is not to actually touch anything in relation to what's happening manually. What they're doing is they're picking stocks and they're reading news and they're adjusting. And that's just kind of what they do. They're not really manually trading per se. It's not like what you think. You think that they're in an office and you're putting in orders here or there, setting stop losses, putting in limit sells, and that's not what's happening. The computer will do that pretty much all that and they have big teams that work on that. Uh, and there are dark pools and everything, but this is just a place, and I think this channel should be a place where we come together and we know and we accept the risks that happen with trading. And you just have to take it on the chin. I mean, what are you going to do? You're going to quit trading and you take that huge loss and you write it off your taxes for the next couple of years. And then and that's it. You just spent 10 hours a day in front of the computer every day. You became an expert in rig counts. You know everything there is to know about crude oil. You even know the composition. You could get into chemistry. Oh, you shouldn't. I mean, quitting after all of that is just a different beast within itself. You probably have like mental issues, I think. Knowing that you did that every day, it affects your sleep too. I don't think I can quit trading. I think I'm a part of the market now. I've been a part of the market. Me leaving for me would be a huge deal. And it's not just the money. It's never just the money. I think most traders are addicted to gambling. It's hard. I used to have a really big thing against calling it gambling, but that's just. I know we don't want to call it gambling. we could probably call it educated gambling, right? We have some sort of knowledge of what's going on, but the high-speed traders are not gambling. The people using algos and AI and designing all that software, they're not gambling. They're looking for consistency. To put it in comparison, when people are playing Magic the Gathering, there's a thing called CEDH and EDH, and CEDH is competitive EDH, and EDH is the regular version of the format. What makes them different is that one is hyper-focused on optimization and consistency. Us as retail traders, no matter how good we think we are, we will never be able to truly achieve consistency. We have too many emotions. We have sometimes we think we have a great insight on something and it's just wrong. We're not thinking properly. Computers don't have that. They think the way they think, and they're programmed to think the way they think. And they can make mistakes, but they're not going to be making different mistakes here and there. It's going to be the same mistake. So there's a consistency in its wrongdoings as well. It is just hard. I mean, being a trader is not easy. The point of this video is probably to say and to make it very apparent that trading is not easy, and that you at some point will have to realize that. A lot of people get stuck in their own head and they think that they belong in the market. They think that the market has a place for them. The market doesn't have a place for you. In the 1940s, it had a place for you. In the 1980s, it probably had a place for you. 1990s until now, it hasn't had a place for you. As a retail trader, as a mom or pop who isn't just holding stocks, everything is bet against you. You look at some of the traders of these like self-funding traders, not self-funding trader, what is it? Proprietary traders that are funded by firms, and their rules are so strict. I mean, if 95% of people lose, if you do that self-funding stuff with them, it's 99% will lose and that 1% wins. And that 1% is not making that much money. You think about all the fees you're being charged by the exchange, by the government. You're paying taxes, 30% if you're doing short-term trades, 20% if you're doing futures, and 15% if you're doing long-term equity. But you can your money's going to be taken from fees. It used to be worse. You had to pay $5 a trade. Sometimes you have to pay $4 to get in, $4 to get out. Nowadays it's free, technically, not truly free. Nothing in life is truly free. But you get all those fees eaten from you. You got the exchange fees. Then you get the taxes taken out of you, and the taxes will kill you. I promise you. You don't realize this, but when you sell something, when you buy and sell, you owe taxes on your capital gain. So a lot of people don't realize the way that works. You can really get screwed that way. You make a ton of money and then you lose it the next day. You still owe taxes on that first trade. So there is a really big dinger in there for people. and you can only write off 3K a year from that. So, you know, all the things I'm saying sound very pessimistic, but it's true. The market is not the the whole idea that this whole Wall Street bets community has arisen, and that all of these young people are getting into trading and they belong in the market and they can do it. There's a guy who made 5K into $1 million. Yes, that is possible. Yes, you can find a zero DTE, zero day to expiration trade where you pick up contracts for, you know, $20 each, and so you pick up, you know, 300 contracts, 400 contracts, and, you know, something happens. Donald Trump makes a tweet, and your puts appreciate. You didn't even hedge it. You just bought straight puts, unprotected, and they appreciate to 160, 180 each. Could be more if you're trading Tesla. You could end up making damn near $500,000 in a day. It's just not. It's not common. It can happen. But for the amount of times it happens, it's like pulling a lottery card, because there's no skill involved there. There's no consistency. It's not like you're able to spot these things and get into there. You have to remember that rogue waves are way more common than people think. Trade crude oil for a week. Trade crude oil for a week and look at what's happening in the market. Look at the news. Look at the inventories. Look at the reports that come out. And you'll say, okay, well, everything's pointing towards a very bullish market. This makes sense. OPEC is saying great things. Inventory is declining. We're in a good season. And bam, you see oil fall 10%. And you'll say, what just happened? I just lost all of my retirement money. And you say, well, yeah, because rogue waves are a thing. You just don't see them coming. And they'll come. And they do come. I've been there. I was there for negative prices. I was there for $20 drops. Those things kill you. You could be eating dinner. You say, well, I got enough money. I got enough margin to protect this. 30 minutes later, you look at your account, you're negative 40K or 50K. You just lost your daughter's college fund. Do you really want to be a part of that? You got to ask yourself those questions when you want to trade. Been in this for 6 years. That doesn't sound like a long time, but I promise you that every single individual that came into this with me either started to work at a firm and never touched personal trading again, or just completely got out of it. They lost their money, or they just found it too stressful and they completely got out of it. Very few of us have continued. And the people that have continued, like me, had insane losses. I mean, I can tell you I lost... in university I was trading and I lost 15K in a day. And that wasn't even with options. It wasn't a directional trade. It wasn't an unprotected trade. It was just with equity. I was buying into stupid stuff. Some companies were like, Chipotle was a decent company. It had a lot of potential. And then they have some food scares and you end up losing half your money on something that was relatively safe at the time. It was a very popular brand. It's like buying Microsoft, and the next thing you know, they say, well, all the software they've been releasing is corrupted. No one trusts Microsoft anymore. Okay, well, the stock's going to jump down to like 120 in a week. Same thing with Tesla. They have those autopilot scares, and the price of Tesla can really get hurt if people start questioning the integrity of the systems implemented. Not only that, you have the deliveries that are a really important focus for people. So I know this is ranting, and I know you guys are confused. What's the point of this video? Well, I'm just ranting. Let's just sit in this together and let's just enjoy it. This is the investor's rant. I might even call it that. But I've been in here for too long. I've worked at a financial firm. I was there. I was in structured products, and I hated it. I mean, well, I didn't. I liked the team. They were nice guys. I was way too nervous. And all I was doing is making settled transcripts and talking to people on phone calls, and I just thought, well, I want to be actually trading. This isn't really what I want to do. But at the end of the day, the people I was working with were making millions of dollars. And they had a great amount of information coming to them every month. I mean, the financial firms would send you market outlooks that actually do make quite a bit of sense, and they have a lot of insightful information in them. and you can trade based off of them. I think there's a couple of contracts you signed, but going back into retail trading after that was refreshing, but boy, oh boy, was it probably not the best idea. I had great opportunities there. Starting salary for me probably would have been $80,000 to $90,000. In fact, I was offered a position and I said no. I said I'm not going to do it. I don't want to be working in an office every day. A lot of your coworkers are going to be in their 40s and 50s. Some of you might be in your 40s and 50s, but it's sometimes more enjoyable to be in a more lively environment. But retail trading just might not be that place too. Futures trading itself is one of the most stressful and most complicated things that you would get into. Trading grains is not complicated. I've never lost a single dollar trading wheat. And that's because wheat is just wheat. The seasons are there. You follow the weather, and the chart has pretty easy patterns to follow. I've never lost a single dollar. I've always lost money with oil. I've done great with gold. I've done great with copper. Natural gas was a big winner for me. I came into natural gas when everyone was selling, and now it's double what it was. But all of those wins, and all it takes is that one loss. I mean, you just weren't paying attention to your risk, and now you lost 400 grand. Well, how long did it take me to make 400 grand? Well, it took you, a month or 2 months of sitting in front of a computer screen 10 hours a day, not experiencing anything outside. Do you really want to be doing that? Those are questions you need to ask yourself. Anyway, I hope you guys have a great day. It's been a long video, right? We will end it here, and I hope you guys learned a bit or two from this. And just have a safe trading day. It's the weekend, but you will be having a crazy Monday come up. A stimulus package wasn't passed as well. That really screwed me there on those on a couple of my trades. But anyway, I will be talking to you guys later. Have a great day. Bye-bye.